A warm welcome to you. Thanks for watching the Morning Outlook by Kalkine TV. I'm Sage. Hope you're having a good morning so far. The Australian shares are likely to open marginally higher on the first day of the new month, July, following a milder fall than expected on Wall Street. However, weak underlying prices may exert pressure on domestic commodity shares. The benchmark ASX 200 index is set to open 14 points or 0.2% higher on Friday, as per the latest ASX Futures. On Thursday, the benchmark index fell 2% to 6,568.1 points. On Wall Street, the Dow Jones slipped 0.8%, the S&P 500 dipped 0.9%, and the Nasdaq ended 1.3% lower. The three major US stock indices closed June and the second quarter in the red. The S&P 500 index recorded its steepest percentage fall in the first half since 1970. And the three indices reported their second straight quarterly falls. On Thursday, the US data showed that consumer spending surged less than expected in May. It also suggested that prices have probably increased, forcing people to cut down on some purchases. US Dow Jones is at 30,775.43. The US S&P 500 is sitting at 3,785.38. And the US Nasdaq is at 11,028.74. So this was the case, although the US economic data was mildly on the upside for May, with personal income rising by 0.5% in May and spending up 0.2%. However, the worrying variable was the core PCE deflator, which lifted by 0.3% in May to be up by 4.7% on the year, being the key inflation indicator. The hiring sector continues to see momentum, with initial jobless claims falling by 2,000 down to 231,000 last week. Shares of Walgreens Boots Alliance shed 7.3% as its quarterly profit plunged, and the Dow Jones index fell by 254 points or 0.8%, and the S&P 500 index lost 0.9%, with the Nasdaq index being down by 149 points or 1.3%. In the June quarter, the Dow fell 11.3% and the S&P 500 lost 16.4%, their worst quarters since the March quarter of 2020. And the Nasdaq slid 22.4%, its worst quarterly stretch since 2008 and the GFC. Year to date, the Dow shed 15.3%, its worst first half year since 1962. The S&P 500 dipped 20.6%. This is its worst first half reading since 1970. And the Nasdaq plunged 29.5%. Its worst ever first half performance. We're really making the record books with this close of the quarter. The US Treasuries rose on Thursday, with yields lower after key inflation data came in slightly lower than expected, and the US 10-year yields fell by around 8 points to near 3.01%, and the US 2-year yields fell by around 10 points to near 2.96%. I guess we have to remember we are in a time of war. European share markets fell on Thursday and the Pan-European Stock 600 index shed 1.5%, posting June quarter losses of 10.7%, its biggest three-month decline since early 2020. Year to date, the index is down 16.5%. On Thursday, the German DAX index lost 1.7% and the UK FTSE index slipped 2.0%. MSCI's gauge of stocks across the globe sank 0.95%. In the London trade, shares of Rio Tinto and BHP both dipped by 3.6%. In the Forex exchange, major currencies traded stronger against the US dollar in European and US exchange. The euro rose from registered lows near US $1.0380 to pegged highs near US $1.0486 and closed near the level of US $1.0480 for the US session. However, notable, the Aussie dollar closed higher from its lows of 68.67 US cents and daily registered highs near 69.18 US cents and was near the 69 US cents level at the US close. Although on the first day of the new financial year, the Aussie dollar fell against the US greenback at the Aussie Forex market open this morning. The Japanese yen firmed from 136.43 yen per US dollar to 135.55 yen and was near 135.75 yen at the US close. Moving on now to the oil sector, the global oil prices fell on Thursday on the news that OPEC Plus announced an increased output in August by 648,000 barrels per day, despite tight global supplies, which has traders uncertain about the future throughputs after the oil futures have been displaying disparate signals over the last week. And the Brent crude price lost $1.45 or 1.2% to reach $114.81 a barrel. And the US NYMEX crude price tumbled $4.02 or 3.7% down to $105.76 a barrel. Base metals prices dipped on Thursday. Zinc was down by 6.2%, with nickel slumping 4.7% lower. Copper lost as well 1.7%, making this the most it's fallen in a quarter since 2011. Adding to the record books there, overall metals fell between 20% and 40% in the June quarter. The gold futures price fell by US $10.20 or 0.6%, down to $1,807 or 30 cents an ounce, and spot gold was trading near US $1,807 an ounce at the US close. The iron ore futures price fell by 11 US cents or 0.1%, down to $130 a tonne. Taking the strength of the Australian energy sector and its role as a global supplier of coal, the demand for Australia's commodities is in the spotlight. The Australian coal and natural gas exports have both registered record highs. Positive signs from the broader resources export income up 29.2% over the year to April. With soaring coal prices, the Aussie coal miners have been raking in the gains in 2022. Proof of this being Whitehaven Coal, the little darling of the energy sector in Australia, earning the most gains on the S&P ASX 200 this year, up 73.2% for June 2024 reading. Also taking the pedestal are New Hope Corporation and Coronado Global Resources, with share price increases of 50.5% and 45.9% respectively this year. Interesting to note, though, that rising coal prices are causing domestic electricity users to pull in the purse strings with rising costs, although the energy producers are making gains. Despite the push for more green energy, Australia still heavily relies on coal for electricity, with roughly 2/3 of the electricity supply coming from the black mineral. And sectoral-wise, energy was the strongest performer on the S&P ASX 200 index so far this year, up 22.3% to June 24, with Woodside Energy also setting benchmarks for the sector, with the surge in commodity prices onset from the war in Ukraine. And overall, the car stocks have fallen, with Tesla leading the onslaught. Ford Motor and General Motors stock price dropped 34% and 27% respectively. Tesla shares fell about 38%, as we said, leading those losses after the automaker has made cuts to its staffing of hourly workers at its self-driving division, although it's reported from CEO Elon Musk that he's planning on having an intake in coming months. It's notable the drop in Tesla's share price decreased the company's market cap by more than $400 billion. And that's all for today's morning outlook. Hope that will set you up for your day in trading. Thank you so much for joining us. And please keep watching for more of these market insights and expert talks. Till the next episode, Sage here signing off.